Give it another 20 years and literally no young person will be able to afford to purchase a home, period.
It's a lot harder for young people today to save up for markers of the American dream than it was for previous generations.
Millennials' net worth quadrupled from $3.9 trillion to nearly $16 trillion between 2019 and 2024. But more than half report living paycheck to paycheck.
It's not the overspending, it's the cost of living.
Just thinking about all of the headwinds that a 30-year-old may have, like student loan debt and car loans and credit card debt, and then they have rising rent.
You have a lot of people 25 to 34 who are looking to start a family and cannot find a home.
We're actually projecting that about 1 in 4 young adults today will never have kids.
Those are people who helped elect the president, who want stable jobs, who want rising wages, who want to be able to do things for their family that they don't feel they can do now.
We're living in two separate economies. The American dream that was pitched to the Gen Xers and the Boomers is no longer present in today's world.
Starter homes are disappearing from the United States. In the early 1980s, as many as 40% of the new homes built were considered entry-level. By 2023, just 9% fit the criteria.
Give it another 20 years and literally no young person will be able to afford to purchase a home, period.
Meanwhile, a slowdown is mounting in the home building industry, which could contribute to the ongoing decline of the starter home.
Both housing starts and building permits, which are an indicator of future construction, have slowed down this fall, and it's not just seasonal.
There are over 3 million potential first-time home buyers in the country. They're up against high home prices that keep rising.
What you're starting to see are mini price bubblets in markets that are an hour, 2 to 3 hours from major metropolitan cities.
It is such an unusual market because we have an all-time low of first-time home buyers, but an all-time high of all cash buyers.
So where did all the starter homes go? A starter home is typically modest in size and price.
It's the most affordable home in any market. If you're in the Midwest, maybe it's in the $100,000 range. If you're in California, a starter home might be in the $400,000 range.
To me, a starter home used to be a smaller condo, a smaller space, and someone would upgrade maybe after 5 years as they get married or have a family and want to move. But now we're actually seeing that most people are buying their first home as a single family residence and really planning on staying in place.
America's home builders are making fewer of these kinds of units.
If you look at the number of single-family starter homes, those defined as being 1,400 square feet or smaller, we used to supply anywhere between 400 and 500,000 units a year.
Over the past decade, builders have put up less than 100,000 homes each year.
Really, by far, the number one reason is the increasing difficulty that many builders have in dealing with zoning regulations.
Zoning laws are set at the local level. These laws can determine the size of each lot in a neighborhood. They can also specify how far a structure is set back from the property line, how tall it is, or how many units are on site. In many cases, these laws create an opportunity for local residents to challenge new development. The residents often raise concerns like overcrowding of schools and wear and tear on local roads.
A lot of this has to do with density restrictions within local communities. They may not want a townhouse or a condo community coming in, but they absolutely will welcome a single family community.
Zoning codes are found all around the country. The most restrictive ones are often found in major cities.
Many builders are not leaving money on the table. They are just simply unable to build, or it's become so expensive to build that they can only build high-end single-family and high-end multifamily.
Given the high price of land, labor, materials, it's very difficult for big home builders to build the entry-level homes. There are a couple who specialize, like D.R. Horton, which has an express homes division, which specializes in starter homes. But for medium-sized builders, it's just very expensive in order to pencil all the costs they have and make it affordable to that lower-end buyer.
As a result, home builders and first-time buyers are targeting further-flung locations.
We've definitely seen a trend toward purchasing a home further from the urban core. So you do see a lot of new construction in suburbia and exurbia.
Home values are now rising most rapidly in low-density and rural areas. Experts say that relaxing these codes could lead to higher levels of home building and preserve affordability.
For example, in San Antonio, there's some builders that are building sub 1,000 square feet single-family detached homes, right? Which would have been almost unthinkable just a few years ago. So the market is reacting, but its response mechanism is really limited because of the rules of the game.
Some areas with less restrictive zoning codes are welcoming many newcomers. For an example, see Metro Atlanta.
Home is in Atlanta now. I'm currently in Decatur, Georgia, which is right outside of the perimeter, so I have easy access to the city. It gives a little bit more of suburban-ish kind of feel. It's just the culture, the energy, the aesthetic, the environments, a more elevated experience in day-to-day living, honestly.
Lillian Mantaya is a filmmaker and entrepreneur. She was in line to buy a home in the Baltimore area in 2024, but that plan fell through. Since then, she's moved to Atlanta to live with her sister and come up with a new plan.
I did grow up in Baltimore. I gave Baltimore a shot in my adulthood with my children, and I did the 9 to 5 and, attempted to buy a house there and everything. But Baltimore wasn't providing just the lifestyle, resources, community that is needed for me to thrive. And Atlanta has been able to kind of just support me more.
Experts say that more dense forms of housing could have helped first-time buyers, particularly in crowded areas.
We do know that local communities are trying to address the lack of housing inventory in pretty unique ways. So accessory dwelling units is certainly a popular approach right now. That's one solution, but I think we need to be looking at adaptive reuse as well. So looking at vacant hotel motels, looking at vacant residential malls, and how do we bring residential housing units into those areas?
Much of the new construction since 2020 is in luxury apartments, with units that are not for sale.
The recent boom in multifamily construction has been on the higher luxury end, but it's easier for multifamily developers to get in and pencil that many apartments because they're renting them, and rents have been very high.
Finances are a big barrier for first-time buyers. The premium paid to buy a home has increased sharply relative to renting over the past decade. The increases in home prices have also outpaced increases in wages. As a result, home sales are down across many markets, and the median age of the typical first-time home buyer has climbed to 38. That's up from age 29 in 1981.
Just thinking about all of the headwinds that a 30-year-old may have, like student loan debt and car loans and credit card debt, and then they have rising rent. And so keeping that all in mind, it's hard to save for a down payment when housing affordability is really out of reach.
The problem is you have the most demand on the low end of the market because affordability is so rough right now, but you also have the least supply on the low end of the market.
The average price of homes has increased rapidly too. Nationwide, home prices have climbed over 52% between January 2020 and October 2024. Adding to the burden, mortgage rates have returned to their standard historical range, near 7%. Homeowners with a mortgage are paying 29% more than they would if they rented the same house. Dynamics like that are shutting out all but the highest income Americans out of the market, at least on average.
We're seeing first-time home buyers come into the market using inheritance, using 401k or stocks, cashing those out, combining all of these resources, and actually making an all-cash purchase.
Investors are buying homes too, but economists saw their shares jump to an all-time high in 2024. Still, they make up a tiny fraction of the overall housing stock.
The issue of large-scale investors is really not an issue. If you look at their share of the market, it's only 1% to 2%. However, if you look within fast-growing markets, particularly those that are affordable, and in the South, those entities are making it a little bit more difficult for buyers to purchase. Having said all that, if there was a normal amount of supply and we didn't have the shortage, this would not be really an issue.
With elevated prices on the market, today's buyers may need to rely on outside help to finance a home.
I think it's increasingly difficult to buy that first home if you don't have help. In a more affordable market, it's $400,000. That means you have to come up with $80,000 in down payment if you assume the typical conventional loan. That's really difficult to come up with that down payment. So We do see in the data increasingly more consumers getting help, whether that's from their parents or from down payment assistance programs.
There are over 2,400 down payment assistance programs nationwide. Depending on your income and where you live, the aid can be substantial.
I haven't purchased a home yet, and I've been in the process of purchasing a home. But being in this process, I definitely have more of a optimistic, perspective with home buying now. And I just talked to a realtor here, and she even told me that you are able to purchase a home even with a credit score of 500 and something. So I think it's just a matter of taking the initiative and knowing that you can be a homeowner.
Regulation at all levels of government affect how homes are built. Experts say they're holding back new construction.
This crisis is worsened by various factors, including rising construction costs, regulatory burdens, and limited availability of buildable land.
There's definitely excessive regulation, a lot of inefficient local zoning.
The zoning codes really originated nearly a century ago, and it made sense at the time. However, since then, there's been an increasing thicket of layers that have made it increasingly difficult for builders. This is sort of the concern, unfortunately, with policy, is sometimes you have to think about in advance things that can go wrong. So think about zoning. It made sense in the 1900s. It began in New York City. It made sense if you needed meatpacking plants to be a little bit away from residential areas. But you take that to an extreme and out of New York City and into middle America, and then it causes problems.
Regulation at this point can make up 25% of the builder's cost to build that home, and there is a lot of talk of deregulation, especially under the new Trump administration.
Until more housing is built, prices are expected to keep marching upward quickly.
The willingness and desire for homeownership amongst renters, particularly younger renters under the age of 35, is very high. However, the problem is the obstacles are also just as high.
This is a mock monthly household budget for an American family in 1985. If we compare that to a hypothetical budget in 2022, we can see that most expenses scaled with inflation, with a few exceptions. Rent, out-of-pocket healthcare costs, and childcare are notably more expensive in 2022, even when accounting for inflation. And costs associated with retirement increased by more than 60%. But these numbers are not accounting for a big X factor: consumer debt, such as credit cards and student loans. Total outstanding consumer credit was nearly $600 billion in December 1985. By 2022, it was nearly $4.9 trillion.
Debt has been rising over time. Student loans weren't really a thing for baby boomers.
Millennials have larger student loan balances, bigger mortgages, much bigger car payments than their parents did a generation ago. In addition to more expensive childcare costs, higher prices pretty much across the board. So that does make it more difficult to set extra money aside or make any long-term plans.
We're living in two separate economies. The American dream that was pitched to the Gen Xers and the Boomers is no longer present in today's world.
A lot of people, particularly the working class and the part of the middle class, don't think their children will be as well off as they were. That's a problem.
Many people live in what I describe as at break even. Over the course of the year, they might make enough money to pay for basic living expenses and cover their bills. But if one major thing happens, then they can get behind.
Here's why young American adults are struggling to make ends meet and what can be done. Millennials' net worth quadrupled from $3.9 trillion to nearly $16 trillion between 2019 and 2024, but more than half report living paycheck to paycheck.
A lot in this group have benefited from a strong jobs market and rising wages. And during the pandemic, many people bought a home. That made a lot of people wealthier, but more on paper. The disconnect between being rich on paper and feeling well off has been referred to as phantom wealth. Your net worth has gotten greater, but you're not feeling richer necessarily.
It's taking young adults longer than their parents to meet some milestones, such as living on their own, buying property, and starting a family.
It's a lot harder for young people today to save up for markers of the American dream than it was for previous generations. When we look at home buying, As we all know, we're in historically tight housing markets. There are very few homes on the market, and those that are on the market are extremely expensive, not to mention expensive mortgage rates. And the prices of homes has escalated over the last few decades much faster than actual incomes. So it is actually much harder for a millennial or a Gen Z to save up for a down payment to buy a home.
It's not the overspending, it's the cost of living.
I think the middle class, unfortunately, is dead for millennials and Gen Zers, or best case scenario, the goalpost has just moved and it's still obtainable, but you have to make over 6 figures to have that middle class life. But people who are older were in a better economic time growing up, because the big difference is what I call the big three. Millennials and Gen Zers are faced with outrageous housing prices, whether it's rent or owning, massive monthly college student loan debt payments, and daycare.
Freddie Smith made a career shift from actor to realtor and started making content about the state of the housing market.
In the summer of 2023, I was maybe one of the first or the handful that was able to say, hey, the housing prices hit 420, the interest rates hit 7%. You now need $120,000 to qualify for a home. And it went viral. And then it just bled into people asking comments and me making more videos. Then it got into the boomer versus millennial debate, and it just kind of continued to grow from there, and it took its own shape. I had to rebuild my life in my early 30s, so I'm really relating to the 22-year-olds who are building their life, and it's a totally different economy than when I built mine when I was 19.
Not being able to save for a home has big retirement implications for millennials and Gen Z.
Those who don't own homes, now those are people who are in real trouble. They're trying to save to get their own place. They're paying high rent somewhere. They're commuting a long distance or trying to work at home so they can save on childcare or so they can save just on housing costs. Those living patterns are increasingly what's happening for younger workers.
In the 1980s, the typical first-time homebuyer was in their late 20s. With a 30-year mortgage, that would mean they owned their home outright by the time they retired in their 60s, providing them with a better chance at sticking to a fixed income in their retirement. A national housing shortage, high rent prices, and competition from wealthier buyers are all making it harder for young adults to buy their first home. In 2024, the median first-time homebuyer was 38 years old, an all-time high.
You have a lot of people 25 to 34 who are looking to start a family and cannot find a home for their families. Maybe the homes aren't where they want them to be inside the city, but even outside a city, it's been very difficult for young families to find a place.
So I think it's healthy for us to try to find different ways that maybe home ownership doesn't have to be the symbol of the American dream. But then to counter that, on my own point, I encourage those who can afford homes to buy it, because once it's paid off, you're going to have a more comfortable retirement because you're not going to be subject to the ever-increasing rent prices.
Many Americans are navigating a new kind of economic instability, which traditional financial advice may not prepare them for. Rachel Schneider co-authored the book The Financial Diaries with NYU professor Jonathan Mordock. They spent a year tracking the granular spending habits of 235 families.
What we saw was a huge amount of volatility. That was our core finding. The majority of Americans work hourly jobs. And so for them, the amount of money that they earn fluctuates week by week. I get 30 hours this week versus 45 hours next week. And so as a result, income is really up and down over the course of a month. And that flies in the face of all of the budgeting advice we usually give people.
There's a difference between surviving and thriving. And I just think if we're going to claim that we're the richest country, the best country in the world, why isn't everyone who's working 40 hours, 50 hours a week thriving? How is that possible?
On top of income instability, cost of living is increasingly unstable.
Tariffs have added a lot of uncertainty into future economic conditions. We don't really know how this is going to play out just yet. And if people start to feel nervous about what lies ahead, then they may dial back on things like consumer spending.
The tariffs are creating uncertainty for those people. They don't know what to do. Businesses aren't hiring more people. They're just waiting to see they have a stable business environment they can go. Without stability, they can't. At the same time, the tariffs are going to create a big sales tax on lower income people who spend more on the basics, which are going to go up. And so that's going to create problems for them too.
What the historians tell us that every single new generation gets complaints from the older generation about how they're behaving irresponsibly, immorally, blaming millennials for spending too much on avocado toast.
It's not student loans or a tough job market keeping millennials from buying homes. It's reportedly avocado toast.
The one piece of advice for young people out there who are spending their money on avocado toast and don't have any goals, what would you say to them?
I would say to them, get as much pleasure out of saving as you do spending.
This kind of advice is usually framed as a warning against lifestyle creep, which is the idea that as people earn more, they subtly start to spend more, and that's what prevents them from properly saving.
I think that's why there's so much confusion, because you can point to a millennial who spends $1,200 on DoorDash. Not good. But you can also point to a millennial who's very financially conscious, making $80,000, and is drowning in debt, and is living with a roommate, and is a lawyer at 29 years old. That is not right. If someone got straight A's in school, straight A's in college, got a bachelor's, got a master's degree, and is 29 making $80,000 and can't even get their own apartment, let alone purchase a house or have financial stability. So that's where I think there's something broken in the system.
Even though households have become significantly wealthier, many consumer goods are also a lot more expensive. And at the same time, Americans are now largely on their own when it comes to things like insurance, retirement savings, healthcare. That makes it harder just across the board to feel financially secure. In some ways, Americans are even more financially vulnerable now. Even as prices have come up significantly, consumer spending hasn't really changed that much. And that leaves more Americans relying on things like credit cards to kind of make ends meet at the end of the month. With economists now forecasting a possible recession in the months or year ahead, there's a greater chance that many Americans won't be prepared for an economic shock.
There aren't so many people in the middle class. There's a big working class. Those are people who helped elect the president, who want stable jobs, who want rising wages, who want to be able to do things for their family and improve life for their kids that they don't feel they can do now. But those people haven't seen much respite.
The core kernel of wisdom in the avocado toast issue is make choices about what really matters to you. You spend money on stuff that will be of value to you. Also, good advice is create a savings habit. Unfortunately, the way that ends up getting translated to people is you should set aside 6 months of earnings in case of an emergency. And most people are like, yeah, that's impossible. That's impossible. It's a huge amount of money. And so what people then take from that is, I guess I can't save.
So I always encourage people, once you do get that promotion, just stay where you're at for a while and just accumulate money, even for just a year. Maybe buy yourself something nice, but just keep that money for a little while and just enjoy the freedom. Because all of a sudden you're not as fearful at work because you got a little cushion.
There are more ways today to upskill than there have ever been before. I mean, there's online classes, certification programs, even, online degrees. So it is easier today to make yourself more competitive in the job market, which will help if you do feel like your job or job security isn't what it used to be.
There's a societal need here, and some of that is about embracing and understanding that if you are struggling financially, it is not your fault. People often feel a lot of shame and distress when their financial lives are not going smoothly. And yet a lot of what they're experiencing is not the result of anything that they have done or could have done differently. It is the result of choices we as a society are making. And can we make those choices in a way that will allow me to be financially stable and upwardly mobile? And then I also think the reality is that societal change is slow, and any one individual does have to make their financial life work as best they can in this moment. We're going to see people cohabitating with friends for longer and coming up with creative ways to share childcare across families, because that's what it's going to take to make it work. And actually, we're going to see, I think, some real benefits in community that could come out of that. So to look for the silver lining of, okay, I might not be able to be as independently financially stable, but what does that mean for the interconnections I can and should create with other people?
America's fertility rates are hovering around historic lows, with approximately 1.6 births per woman over her lifetime. This is below the level needed to sustain the population, which is 2.1 births per woman.
We're actually projecting that about 1 in 4 young adults today will never have kids. There are plenty of us out there who are kind of concerned about the falling birth rate, both for kind of its impact on people's ordinary lives, as well as for the ways in which it'll affect our economy and our government.
And we will support baby bonuses for a new baby boom. How does that sound? That sounds pretty. I want a baby boom.
Our population will, in the not too distant future, start to decline. And so that's why this is an issue for governments and for the economy, and politicians are starting to pay attention.
The concern here in the US is that if we see kind of dramatic declines in fertility, we will eventually see also kind of a drag on our economy and our capacity to cover all sorts of government programs like Medicare and Social Security.
Our population is sort of getting older on average. And what that means is we have the baby boomers who are, in their older age years. So they are drawing Social Security, and they also have quite a bit of medical and care needs. And so the question is, how will we care for our aging population?
It's very hard in modern US society to combine work and having kids. We have very little by way of support to families in this country.
Here's why the government can't seem to convince Americans to start families. When birth rates fall, it affects the entire economy.
One of the big drivers of economic growth is just having more people in your society, more consumers, more workers, more taxpayers. In East Asia and countries like Japan, for instance, that have seen below replacement fertility for a long while and are now actually just shrinking demographically. Both in terms of the Japanese economy, there's been stagnation, but also in terms of the Japanese government having greater difficulty kind of paying the tab for the challenges they face in terms of particularly supporting an older population that is relying to an important degree on the Japanese government.
With the worker to retiree ratio shrinking, Social Security and similar programs could struggle to remain financially sustainable.
The Social Security trustees put out a report about how long they expect Social Security to stay solvent. I think the current estimation is 2033. So people are worried about that. What's interesting, though, is that the lever that we are trying to force on people now is people should have more children, so that then eventually, 20 years from now or so, we'd have more workers who would then be paying into it. It doesn't seem like a very efficient system to me because it doesn't solve the short-term solvency problem.
Leaders across the U.S. political spectrum have proposed ways to address the birth rate decline.
You've got Elon Musk, who is essentially having the ear of the president and in the White House, and he's very much interested not only in increasing birth rates, but this notion that the best and brightest should really be reproducing. And then you have someone like J.D. Vance.
So let me say very simply, I want more babies in the United States of America.
Who have, I would say, a more sort of religiously or conservatively oriented bent about this. So it's not just about increasing births, but it's about increasing births within sort of a traditional family. So marital status is really important to this group.
We had the Democrats pushing really hard for an expanded child tax credit. Now the Republicans come out with something called a baby bonus. That's what the New York Times reported. That would be $5,000 allegedly at the time a child is born. This is a pretty common policy in other countries, that there's some extra child allowance, child tax credit, baby bonus sent to parents when they have a newborn. Having a newborn is expensive.
Both political parties have proposed policies that provide money to families either in the form of direct cash or tax refunds. But experts say one-off proposals are not likely to move the needle for families.
The kinds of financial incentives or benefits that we're providing just really aren't enough to change the calculus of a trade-off of bringing a child into one's household or family. That's an 18-year commitment. It's not just a one-year cost.
In particular, the $5,000 baby bonus that's being sort of bandied about is not likely to budge fertility rates.
The United States lacks key policies that other comparable nations have that could potentially encourage family formation, such as federal paid parental leave, flexible work, and some fertility care access. The U.S. offers less cash and services than the average OECD country. However, it is above average when it comes to providing tax breaks for families with kids.
Research suggests to us that these are family studies that markedly increasing like the child tax credit can have a modest but noteworthy effect on births So what we estimate is that if we were to increase, for instance, the child tax credit to $4,500 per child, it's about $2,000 right now. That would lead to an increase in fertility of between 3 and 10%. On the one hand, that's a pretty modest number. On the other hand, if you kind of look at that effect over the course of the century, we're talking about millions and millions of extra kids being born because of this additional financial incentives.
But even wealthy countries with stronger social programs continue to struggle with low birth rates.
France really has been spending a lot on pro-family policies. They now have one of the higher fertility rates in Europe. It's still not above 2, it's still low. How much of their policy emphasis actually helped sort of stall out the decline so they're in better shape than some other countries is a really difficult empirical question to answer. But I do think it might be a glimmer of, optimism on the policy front, suggesting if we really do a lot to support families, we at least might be able to stall out the birth rate decline.
Many governments have attempted to influence or even limit their citizens' family formation practices, such as Japan's recent Pronatalist campaigns or China's one-child policy. But studies have found that these policies may have unintended consequences.
It's hard to imagine a scenario where the government can say to people, well, we just really need you to have kids because it's important for our country. Sort of a take one for the team, patriotic kind of exhortation. Like, that's not probably going to happen. They've tried that in China. They're trying it in Japan. They try it in Italy. They try it in Hungary. It doesn't actually work.
America's birth rate used to be higher, but it was partly driven by unintended pregnancies, especially among teenagers.
We have actually spent years, decades, and millions of dollars from the federal government trying to reduce our teen pregnancy rate, which was much higher than other industrialized countries. And so I think that's a good news story. The downside is births at older ages have not risen enough to offset the declines we're seeing at these very young ages. And so that has driven our overall fertility rate lower, although we all are seeing increases in births to women in their 30s and even in their 40s.
I think this timing issue is also another question. Has this sort of delay in adulthood, the delay in people feeling like they can find a partner, they can afford a house, is all of that pushing childbearing to such a late age that people are going to wind up having fewer children than they intend or than they would like? And that raises a policy question. Is there anything policy can do about that to make people feel like they don't have to wait until their 30s to get started having a family? And this isn't to say people should start having kids earlier if they don't want to, but are there people who would start having kids earlier if it weren't at the same time that a lot of work demands were placed on people? If it were easier to afford a house before you got to your late 30s, are there policy and institutional changes we could make there?
The Trump administration has vocally supported increasing access to IVF. However, it also cut funding for IVF research. The White House did not respond to CNBC's request to participate in this report.
In thinking about the role of IVF in increasing fertility, IVF is actually pretty complicated. We have companies telling young women, work like crazy during your 20s, and don't worry, we pay for you to freeze your eggs because you can do IVF later. I'm not sure that that's actually going to lead these women to have more children. I think in some sense, we're really forcing the trade-off to the extent we're setting up an expectation that people can delay childbearing to their late 30s. In the end, it might actually exacerbate the low fertility rate or people having fewer children than they sort of ex ante would have liked to have had.
It's common for fertility to decline during economic uncertainty. It usually rebounds once the shock ends, but birth rates did not recover after the Great Recession.
And that kind of caught a lot of demographers around the world flat-footed because it also didn't happen in other countries. So this goes against a lot of this demographic history that we have, which led people to start thinking, okay, what exactly might be happening?
Even with stronger economic support, experts say America faces a deeper, more complex problem, a cultural shift in how people view parenthood itself.
More and more young adults are kind of assuming that what matters for them is, their education, their money, and especially their careers is kind of like the source and summit of their lives. And so it'd be helpful for us to kind of move more in the direction of a country like the Netherlands, where part-time work for moms is very common, as a way to kind of, maximize both their opportunity to have a foot in the labor force, but also to kind of give their kids and their families the attention that they think they need and they deserve. So I think that's certainly one answer to this challenge of kind of women, motherhood, and work.
It's not selfish for women to want to pursue work. Women also need to financially protect themselves. Parenting is really hard now. We're expected to do a lot. It's really intense. Kids aren't just running around the neighborhood, right? Coming back for dinner. If you're making a rational calculation, am I going to be the one who steps back, who really specializes in raising children and then leaving myself financially exposed? I think that's a decision that some people are making. That's like something as an economist start to tinker with. We know how to suggest changes to the tax code. We're less adept at suggesting changes in bargaining between men and women. But I do think there's real evidence suggesting that that matters.
Immigration can also help offset the economic impacts of population decline, but it's politically and demographically uncertain long term.
So we could have more workers, which we could do by having more immigrants. And instead, we're heading the opposite direction of that with fewer immigrants and getting rid of many immigrants in the United States.
I certainly think that immigration is a solution to some of our challenges demographically speaking. The majority of the countries across the globe now are seeing below replacement fertility, including Mexico, actually. If, the vast majority of countries across the globe are also seeing below replacement fertility, we can't kind of count on immigration indefinitely to address our demographic challenges.
I think if we committed to public childcare, like they have in many other countries, we might move the needle. But these are long-term sustained investments. And then we're really looking at sort of slow-moving changes because you have to change the decision-making, the lifetime calculus that somebody is thinking about in their 20s. That's why it's hard to imagine a policy lever that's going to dramatically change things in the next few years.